Good morning, Vuyo. Well, I mentioned a moment ago that the Rand 843, it wasn't just a couple of days ago, it was in the 820s, so quite a strong weakening there, shall we put it that way?
Morning, David. Yes, absolutely. Quite a strong weakening in the Rand. We would describe it mainly to, resurgent fears over global growth that occurred last week, and of course some continued trepidation on the part of non-residents about, the continued disputes and settlement that we see in the mining sector. So all things concerned, it doesn't, South Africa perhaps increasing in risk from an offshore perspective, and that certainly is weighing on the currency this morning.
Well, let's look at the numbers we've got for this coming week. Quite a few different indicators coming out and bits of data, but an important one for us, of course, is GDP, and we're expecting those numbers tomorrow. So give us the context for that and then go on to what you expect.
Sure. Well, as you mentioned, GDP, of course, being the standout feature, even though this is going to be quite a busy week as far as data is concerned. As far as Standard Bank's concerned, we're a little bit, I think, at the high end of consensus. We're expecting growth to have accelerated somewhat from about 2.7 quarter-on-quarter annualized in the first quarter to 4.3 quarter-on-quarter in the second quarter. But I must emphasize that this is not, from our point of view, we're not seeing this as being real growth or a re-acceleration and a continuation of the boom years that we had. Really, this bounce in growth that we're expecting from in the second quarter would be due to the fact that mining output actually recovered from a strike that we saw in the first quarter. So that normalization in mining production is going to have quite a big impact on the numbers, quite a big distortionary impact on the numbers. If you were to strip that impact out, then you would get around 2.7% quarter-on-quarter growth again for the second quarter. So again, just to emphasize, we're not seeing what would be a pickup in growth. We're really just seeing what one might even describe as accounting growth. So just a distortion in the numbers that's going to lead to a big bounce in quarter two. So having said that, however, if we do get a print that's in line with our expectations, this could lead to a dampening in expectations as far as interest rate cuts are concerned for the remainder of the year. We've seen that the market has become a little bit more bullish on the prospect for interest rate cuts. That's after that relatively benign CPI print that we had last week. So should we see a big recovery in GDP along the lines of what we're expecting, I think the initial impact is certainly going to be to dampen expectations of a rate cut. As you would know, our expectation at Standard Bank is that rates are going to remain on hold for this year. We're not seeing any change in rates, at least for the next year out. So that would certainly, as far as GDP and the rates aspect would go, is going to be the key kind of variable to watch this week, and I really think is going to be one of the principal drivers of the Rand market.